Welcome. In this video, Xcn coin will rise if it exceeds which level. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When examining the chart, the first thing that stands out is a very healthy and consistent upward trend. Such structures are among the most reliable formations in technical analysis and indicate that the price is moving with determination in a specific direction. Especially these types of ascending trend lines provide investors with significant guidance in terms of both support and direction. Therefore, the current ascending trend line on the chart is one of the most important elements to consider when interpreting future price movements. Ascending trend lines typically indicate that buyers are dominant in the market and that prices are responding positively to every pullback. The foundation of such structures lies in market psychology. As the price pulls back periodically, investors view these dips as buying opportunities, and strong buying interest emerges from areas supported by the trend line. For this reason, ascending trend lines are not just technical formations but also reflect investors' confidence in the market. In the current situation, this ascending trend is clearly visible, and every time the price touches this line, upward reactions are observed. Looking at recent price action, it is evident that the price has touched this ascending trend line several times and has consistently found strong support there. This shows that the trend line is not just a symbolic level, but is actively followed by investors, making it a strong and valid technical level. Therefore, if the price approaches this trend line once again, it is very likely that we will see another upward reaction, as seen in previous instances. In technical analysis, the more a trend line is tested, the stronger it becomes. The ascending trend line in question has already been tested multiple times, and each time the price has bounced upward, which has further strengthened its validity. This tells us that while there may be occasional pullbacks, overall investor confidence in the trend remains high, and the respect for this trend line continues. If the price touches this line again in the near future, there is a strong possibility that buyers will step in again and trigger an upward movement. Additionally, this ascending trend is also shown to be consistent across larger time frames. This indicates that short-term upward moves are built on a more solid foundation in the medium and long term. In other words, this is not just a short-term reaction, but also a sign that the trend is structurally intact and that the price is in a healthy upward cycle. If the price approaches this trend line again, not only is a bounce technically expected, but it could also mark the beginning of a new upward wave. Especially in such ascending trend structures, bounces from the trend line often result in attempts to reach new highs. This means that if the price touches the trend line again, it may not only return to previous levels, but also carry the potential to move toward new higher levels. The realization of this scenario could produce favorable outcomes for both short-term traders and long-term investors. Additionally, the current ascending trend line also serves as a psychological support level. As long as investors maintain confidence in this line, the market is lifted by the concentration of buy orders in this area. As this confidence grows, the sustainability of the trend becomes even stronger. As long as this line remains unbroken, the market generally operates under the assumption that the uptrend is intact, which supports the dominance of positive scenarios in technical analysis. But we can't base our analysis on trend lines alone. Let's take a look at other metrics as well. Stay tuned. When analyzing the chart, it becomes evident that the price has been moving within a very stable and clearly defined horizontal channel structure for a certain period. These types of horizontal channel formations indicate that the market is in a decision-making phase, where investors, uncertain about direction, are temporarily holding the price within a specific range. One of the key characteristics of such structures is the repeated movement between the upper and lower bounds, offering investors valuable opportunities in terms of both support and resistance levels. Horizontal channels can also be seen as a consolidation phase before a potential breakout. Currently, the price is positioned near the midline of this horizontal channel. This midline can often serve as a key indicator for short-term direction. If the price manages to break above this level, it is typically perceived as a positive signal by investors and significantly increases the potential for the price to move toward the upper boundary of the channel. In technical analysis, holding above the midline is often seen as a sign that upward momentum is gaining strength. This can trigger a new wave of buying activity. In horizontal channel formations, the midline can act as both support and resistance. While it currently serves as resistance, a successful upward breakout would likely see this level flip into support, laying the groundwork for a continued upward move. Therefore, price action above this level should be monitored closely. Such breakouts, especially when accompanied by volume, are often precursors to new upward trends. Horizontal channel formations are among the most reliable structures in technical analysis, as they clearly define which levels are acting as resistance and which are acting as support. Seeing the price move steadily within this channel also indicates that the market is in a healthy consolidation process. In such periods, once direction is determined, the price is expected to move strongly and consistently. If the price breaks above the midline and maintains its position, it indicates that the bulls are gaining strength in the market and have begun to take control. This provides strong motivation for the price to advance toward the upper boundary of the channel. In technical terms, breaking above the midline is not just a simple price move, it represents a shift in market sentiment. Once this shift occurs, investor buying appetite increases, and the price often finds itself testing higher resistance levels. Another commonly observed scenario in these types of channel structures is the price initially breaking through the midline and then pulling back slightly to test it as support. If this scenario plays out and the price reacts positively after retesting the midline, it signals that the upward movement is gaining strength. In such a case, it is very likely that the price will fully utilize its potential up to the upper boundary and attempt to reach new highs. From a volume analysis perspective, an increase in trading volume is expected when the price breaks above the midline. This suggests that the buying side is gaining strength and that the upward move is not just a temporary fluctuation, but potentially the beginning of a deeper and more sustainable structure. Breakouts supported by strong volume are often interpreted as clear buy signals for traders. When taking a closer look at the chart, it is noticeable that the MACD indicator is currently still positioned above the zero level and has recently been trending downward within that zone. However, this pullback should be considered a potentially positive correction within the broader context. The fact that the MACD remains above the zero line indicates that overall market momentum is still in the positive territory. This suggests that even though prices may have declined, the market has not entered a full-scale bear phase. Rather, it is experiencing a period of consolidation or accumulation. Despite the weakening momentum as the MACD line approaches the signal line, the indicator still holds upward potential, which presents a hopeful outlook for investors. The shrinking MACD histogram bars may signal that a bullish crossover is approaching. In such setups, sharp and decisive upward moves often follow temporary pullbacks that might resemble a bull trap, offering significant opportunities for traders. The current MACD position shows that the indicator lines are converging, meaning the distance between the MACD line and the signal line is narrowing. This convergence is generally considered a strong sign that a crossover may occur soon. If this crossover happens to be upward, the technical setup would generate a very positive signal. Such a scenario could act as a trigger for long positions. Therefore, it is important to closely monitor these crossovers. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.